For a yes, you're gonna have to have at least some of these factors that positively affect your credit file, okay? The first is having active and long-standing credit accounts, okay? Now, what is a credit account? A credit account is, according to the big three credit agencies being Experian, Equifax, and TransUnion. A credit account is a mortgage, a bank account, okay, just a regular bank account, any loans, credit cards, utilities accounts, so like British Gas, Thames Water, any insurance premiums, okay? Those, you want to have those types of accounts on your credit file. Now, some people might think counterintuitively, they might be like, well, no, if I don't have any loans or any credit cards, surely that's a good thing because I'm not borrowing. I'm using my own money to pay for everything. So surely that's a positive effect, but it's actually not. It's not a bad thing, but having a credit card and a loan, you're basically demonstrating that you can take out credit and you can repay it on time and settle it over time. And if a lender's looking to do that, they want to see that you've done that with other lenders, okay? I hope that makes sense. And a long-standing account is anything over like 3 years, basically. So at 3+ years, so I'm talking a credit card that's 3 years old, a loan that's 3 years old, a bank account that's 3 years old, utilities accounts, etc., etc. That is a good thing, okay? Now, the caveat over all of this, guys, is make sure, if you remember nothing else from this video, that you repay your payments on time. And we'll get onto this, but basically, late payments on any of those types of accounts is going to negatively affect your credit account seriously and have serious consequences. So remember that, okay? Also, having a high credit limit. So we talked about those credit accounts. And again, this one's going to be seem counterintuitive, but having a high credit limit, and I'm not talking about a credit limit of 20, 50, 100,000 pounds. I've looked at the various credit rating agencies and anything above £1,000. So it could be literally £1,001, whatever. That is actually a positive effect on your credit score because it demonstrates again to lenders that other lenders are willing to lend you large-ish, amounts of money. If you only have credit limits under £1,000, that will signal to a mortgage lender that, hey, look, other lenders aren't willing to lend this person that much or an amount above £1,000. What's wrong? They're not a good candidate to lend to. Now that might just be because you've said, look, I don't need £1,000. I only need 500, 250. But if you want to have a positive effect on your credit score, have at least one credit account that's above £1,000. A couple of the things that help your credit score is being on the electoral register, so being registered to vote. Even if you think, as I do as well, that the governments in this country have been an absolute shambles for the last 5 to 10 years, still vote because it actually positively affects your credit score. And also having settled credit accounts. So if you've settled, and when I say settled, I basically mean you've paid it off over time. So if you had a loan that you paid off over the course of 3 or more years or a few years, credit cards that you've paid off, don't forget to close some of these accounts. We talked about having a few open, not too many, but if you have one that you don't need, close it, okay? Because it basically draws a line under it on your credit score, and it says this person has had credit card or a loan for X years, they paid it off, they closed it, job done, tick, this person's reliable, they can do a credit facility from start to finish, and they're good for it, okay? And again, I'm gonna say again, no late payments, okay?